we like to pay as few as taxes as we can right now to re-inject the capital back into our business, to buy more assets. It's going to generate more income. It's going to cost us more taxes. Never-ending game. You're just buying and buying and buying and buying and buying and growing and growing and growing and growing and growing. And the reality is you're paying taxes.
I look at it, and the way Josh looks at it is, if we can push those on down the road and keep our money now and reinvest our money here and now, year by year, that we are going to get a better return doing it that way than paying our taxes right then and there. Yeah, I think that's the big issue right now that everybody's thinking about and talking about is, we're figuring out where the money's going. Welcome to Chasing Millions Podcast. I'm Erik, and this mofo is Josh. And today, you have something to say?
Oh, we're just talking about a subject I really hate.
Yeah, me too. It's my least favorite thing on the planet.
Taxes.
Taxes.
That's how I feel about taxes.
I know, me too. So if you're like us and most other entrepreneurs, you pay taxes. And unlike the W-2 counterparts that we have an opportunity to strategically, we'll call it,
not pay taxes.
Not pay taxes. Exactly. So,
well, you're always paying taxes.
You're either paying them or deferring them.
Yeah.
In some way, shape, or form.
Or paying them and deferring them at the same time.
Both, right? Usually it's both. So it's a huge topic, and we figured it'd be perfect for our listeners and you guys out there to get a little glimpse into what we personally know. And by all means, what we're talking about isn't financial advice. So talk to your own CPA, your own tax accountants, and get advice from them. But we're telling you what we do and what has worked for us. So just to get that out there. So taxes are confusing. Even people like me and Josh, we deal with them month over month, year over year for many, many years. And we learn new things pretty much every single year. So it is important to, number one, stay abreast yourself, because I know Josh talks about it all the time, and I know I have myself, and we catch things that even our tax accountants don't, which is kind of a conundrum, but it happens. So stay abreast on anything that has to do in your realm of things, right? If you're an entrepreneur, operations, sales, accounting, taxes, you better be taking your time, spending your time, and continuing to stay updated on all of those particular topics. So taxes, hate them, pay them. We all keep hearing about where they get paid and who they get paid to. And it's a pretty big topic right now, right? About how all of our tax dollars are going to different, NGOs, and it's going to countries, and just crazy crap going on, right? Where our tax dollars are going. But at the end of the day, we are liable to pay those. So we have to do our due diligence to make sure that we understand the tax code, or at least have an individual who does understand the tax code and can remove those taxes from your yearly income. So let's get into it. What do you have to say?
Well, I think if you're watching this podcast today and you're one of those idiots that think that rich people don't pay taxes, you're an idiot. Because if you own trucks, you pay your tag, tax, and title. You know what I mean?
You can't get out of it.
Yeah, if you own semi-trucks, you pay this thing called FET, federal excise tax. If you own property, you pay this thing called property tax. Mm-hmm. If you have employees, you pay taxes on your employees, right? So if you buy material for your business, you pay tax on your material, right? So
you get taxed to death.
You're paying taxes on your fuel. You're paying taxes on this and that and this, that, and another, right? And then if you depreciate your assets, offset your taxes at the beginning of your business, right? And you don't buy any more, eventually you have to start paying more income tax. And then when you go sell that equipment, you got to recapture. So the government's always going to win.
Well, let's break it down in a little bit more.
So if you're watching this, we want to simplify it. We want to there's strategies. Don't get me wrong, right? But if you're watching this, don't be an idiot and listen to all these gurus, how you can not pay tax. Yeah, you're not going to be able to pay tax for a period of time, but eventually you're going to pay some type of tax. And if you're in business, your business is paying tax on behalf of you if you're the owner.
Yes. I mean, everything you're saying is true, right? And your taxes get deferred, so to speak. And a lot of times, and then I'll back up and we'll get into this, but a lot of times what happens is that you're buying something, right? Like when you're talking about depreciation, you're buying something to offset your income, right, with depreciation, but you're also getting yourself into some kind of a monthly payment at the same time.
And storage.
There's
holy crap.
Yeah, there's good and bad. So let's get into this. So again, we're going to talk about what we understand and what we know and what's worked for us. So we, as you probably have heard, if you haven't watched any of our older podcasts, I'll catch you up in about 2 seconds, is, we have a service business. It's a very, very heavy asset service business, meaning we own lots of assets to service our customers, trucks, toilets, dumpsters, fencing, containers, you name it, we own it. So in our particular business, when you're asset heavy, you can depreciate those assets on a yearly basis.
Hey, before you get way down a weird wormhole,
are you going to tell me about this?
If you're watching this, at the end of this podcast, we're going to tell you what this is. And if you guess it before the podcast is over, kudos to you, because I guarantee you will not.
Yeah, it's fairly large. So
hey, whoa.
No, don't give me hints.
No more hints.
Okay, no more hints.
Put your comments below. Let's see if you can guess what this is.
So let's talk about taxes. So in reality, business owners make income.
Well, let's talk about how you set up your business. You got LLC and S Corp and sole proprietor and LLC partnership and C Corp and all these different things, and you have trust and irrevocable and revocable and all these different strategies how you can set up things that you own and how structures that you put things in these like little compartments, right? And these compartments have different widgets, how they go up to the IRS, and the IRS looks at them.
You're way over my own knowledge.
Right? So there's a lot more into this tax thing. Erik is a LLC.
Correct.
Partnership, because we own it together, right? So he owns a portion of the business and I own a portion of the business, and all the depreciation and all the good stuff flows down and all the bad stuff flows up when he gets paid, right? C Corps and S Corps and sole proprietors. If you're like my wife in the medical field and you work for yourself, she's a LLC sole proprietor. I think she's actually a LLC something professional, LLC, LP, something, limited professional something. Whatever it is, I filed it for. Yeah, PLLC, whatever it is, but professional LLC. Yeah, which gives you an extra layer of protection, right?
Are you not professional?
Well, professional means like doctor, attorney, something like that. No, we're not fucking professionals. I know. That's why we gave it a disclaimer when we first started this podcast.
Fair enough.
But you hear all these rumors, right? And you hear all these, you see all these podcasters, like I always say, and they have these whiteboards and how they're going to defer this and how they're going to, those are, a lot of that's true. That's how you have yours set up. I help you set up. That's how I've been taught to set mine up, or you have in holding companies and it's owned by the trust, and how the things flow out and how the income flows up, and where you can defer taxes and write things off. And when you sell companies, how the income flows up, and you can dilute the income and the gain as much as you can. So at the end of the day, you pay the least amount of tax. But at the end of the day, if you're playing the game, and the game is entrepreneurship, the business game, you are going to be paying a shit ton of taxes, right? So all you naysayers out here and saying all these rich people and all these entrepreneurs are not paying taxes, they're paying taxes at some which way, shape, or form, right? It might not be income tax right now, but it's property tax, it's federal excise tax, it's employment tax. It's something they're getting taxed on heavily.
Yeah, and I would say, another key thing is talk to a professional, make sure you set your business up correctly, whether it be an LLC, an S Corp, C Corp, sole prop, whatever. Make sure you understand the ins and outs and make sure they set it up properly. And then, just keep in mind that, that's our only shelter from taxes, right?
Your tax shelter, so when you set it up in a LLC or S Corp, it's to protect your personal assets.
Correct.
It's a layer of protection. If something happens within that LLC or that C Corp or S Corp, they have to go through the LLC or the S Corp, C Corp, whatever, and penetrate that. They can still sue you personally if it's a vice or something else. But technically, if it happens within your threshold, they have to go through the LLC to penetrate you personally. Mm-hmm. And that's why there's layers to this. But I know I'm not a CPA by any means. We have a few CPAs that work for us, right? The reason why Erik wanted to talk about this, and I don't disagree, right? Because he can get in way more depth than I am and involved in, right? The more money you make, the more money you're going to be paying back in taxes at some shape or fashion, right? Now,
whichever way, whether you're
the more money you make, the more advice you're going to go seek after. Because you're not going to want to pay taxes. You're going to want to put that tax money that you defer back into your business to buy more assets, to buy more property, to grow your business, to make more income, right? That's what you do. Mm-hmm. You, thank God Trump's in, because now you got 179 bonus depreciation re-ups. So instead of taking 40% last year, now you get to take 100% if it's put in service that year, right? Which is not a good deal when you later on want to go sell your company and you have to recapture all that bonus depreciation, or you go sell that asset in a few years and you have to recapture it and you don't buy anything to replace it.
That's right.
You pay tax on that income.
You divert it for longer.
You're just kicking the can down the road is what they say.
Exactly what you're doing.
So point is, it doesn't matter what structure you're set up. Go get you a really good accountant. They're few and far between. I've had many of them. I have in-house CFOs. I have in-house CPAs. I have in-house really good controllers. I have a lot of different, I think I have like 7 different accounting people in my office in various different levels and skill sets. I always say accounting people are like doctors. There's surgeons, and there's very specific types of surgeons. Spinal surgeons, neurosurgeons, heart surgeons. Same thing goes with accounting. There's accounting that does just your day in and day out books. There's CPAs that focus on tax. There's CPAs that focus on audit. There's all these different strategies that you can, and people you can put yourself around. There's CPAs and wealth advisors that focus on exits. When you exit your company, when you build it up and you're wanting to retire and you want to keep as much money as you can because you wrote everything off and you know Uncle Sam's coming, right? Yeah. And then they hand you this big old bill and you're like, oh God, I'd be better off just keeping it. You know what I mean? So what I a couple of things I want to discuss in this topic is get rid of all the BS. You're going to be paying taxes, maybe not income tax, but you're going to be paying some type of tax in business. So let's clear that air right now, right? You can delay it. You can pay it now. There's a lot of different strategies. Consult with what type of business you're in. To Erik's point at the very beginning of this business, every strategy is different, and everybody's situation is different, and everybody has a different agenda, right? And our agenda, how Erik likes to push it, is we like to pay as few as taxes as we can right now to re-inject the capital back into our business, to buy more assets. It's going to generate more income. That's going to cost us more taxes. So it's just like a never-ending game. You're just buying and buying and buying and buying and buying and growing and growing and growing and growing and growing, and you're not paying taxes.
But at the end,
but you're also not paying yourself any more money because it takes a lot of your profit to continue to grow too.
And the important thing is at the end, right? You've depreciated all these assets, and then you sell your company, and then what happens?
Well, then you got to establish a value to your assets, which is going to cause a recapture, right? And then you have goodwill in there. So we can go on down that, and it depends on how long you hold your company. It depends on what state you're in. Depends on if there's a lot of things that go into that. But today we're going to talk about, The reality of check of paying taxes. And the reality is you're paying taxes. And you can watch Grant Cardone on the whiteboard and Pace Mobley on a whiteboard and all these whiteboard geniuses, right? And a lot of them have very good strategies, and some of those strategies is exactly how I have mine set up.
Yep.
Right? For protection, for layers of asset strategy, for tax strategy, for a lot of different strategies. But I'm just telling you right now, you're going to be paying taxes. If you keep on hearing the repetitiveness in this, what you're learning is what? You're going to pay taxes, right? So the good thing is we have a president that's in office right now. You like him, you hate him, you love him. He's orange, he's outspoken, he's brutal. He's blowing up gunboats and drug ships in the Caribbean. Whatever you dislike or like about him, but he's pro-business, and he doesn't like paying taxes either.
Yep.
So he re-implemented a lot of these tax strategies that are pro-business.
Yep.
Right? So for entrepreneurs like Eric and I, when we get to keep our money, right, and we get to accelerate depreciation, and you're like, what the hell does accelerating depreciation mean? Let's have a quick lesson of what that means. Last year, you could buy a new truck if it weighed 6,000 pounds or more, and you can put it into service that year, had to be placed into service, and you could write 40% of that truck off day one.
Meaning if it was worth
100,000,
80,000, right? 35 or whatever 40% of 80 is, you could write off that much would come off your total income.
Yeah. So if you bought a truck for 100,000, you get to write off 40.
Yep.
Right. So it lowered your income. Now, bonus depreciation. You buy a truck for 100, you depreciate at 100.
Yep.
Right. You go sell that truck 2 years later for 60. That 60 becomes income, which is income tax. Right. And then you go trade it in. Yeah, you recapture the 60, you trade in for another 100,000, you get another 40,000 re-up. It's pretty simple. Trump is pro-business. He understands how all that works, right? What that allows us to do is re-inject back in our business, regrow, hire more employees. And in theory, if you're an entrepreneur and you vote that way and you believe in it, you're going to reinvest in your company. You're going to hire more employees. You're going to stimulate the economy, right? Because it takes people to build the trucks. It takes people to build the equipment you and I build, to put the tires on the trucks and the parts that go on them when the employees mess them up, etc. Right? And the whole economy gets stimulated and you have this pro-business environment. That's what I like, right? I don't like when they take my taxes and they go spend it on stupid shit.
Yeah, it pisses me off.
And you hear, you're over here drowning and taking all these risks, and they're taking all this money out of your pocket and they're giving it to other countries that don't benefit you or hate you.
Yeah, I think that's the big issue right now that everybody's thinking about and talking about is, we're figuring out where the money's going.
It's going to places that the majority of Americans don't agree with.
Yeah, and we don't benefit from. Right?
Well, last time I checked, I don't watch TV in somewhere in Africa. But when I drive down the road and I see a bunch of homeless people sleeping under the bridge, and I'll go home and watch TV and I see that we gave $9 billion to XYZ country that wants to blow us up and hate us.
Yeah.
And I'm like, why is that even an option?
I hear you.
And you hear about all these schools that need money, and we're giving money away like it's free, and we're trillions of dollars in debt. How's that? Why? That's the things that make us Americans mad, in my opinion.
I agree with you 100%. And I think the other thing to think is that, go into entrepreneurship thinking that, and understanding that you are going to be paying taxes, right? And there are different strategies that you can do to offset those taxes. It will eventually catch up to you one way or another, right? You're going to be paying them. So, but the way I look at it and the way Josh looks at it is, if we can push those on down the road and keep our money now and reinvest our money, right, here and now, year by year, that we are going to get a better return doing it that way than paying our taxes right then and there, right? We're going to take that money, we're going to deploy it, we're going to continue to grow and defer our taxes on down the road until one day we decide to either sell or, hey, we're just tired of pushing it down the road. We're going to take one bad year and we're just going to pay a shit ton of taxes, right?
You're going to pay your taxes. Kicking the can down the road only lasts so long.
Yeah.
Right? You can kick it down and you can dilute it decent within all your legal realms, with your advisors advisors, etc. Right? But at the end of the day, it's going to catch up with you. You're going to get caught up. Uncle Sam the system is designed for Uncle Sam to get paid. They are the casino.
For sure. And, you know, another thing to think about is,
And don't try to cheat it. I've never been one to do something so off the cuffs where if I ever got audited, you know, like I'm like, oh shit, this is gonna suck.
they'll get you.
They're going to jump in your books. They're going to ask a lot of questions, and you better have good reasoning because you're not going to know what you did 3 or 4 years ago. You know what I mean?
You better have your ducks in order because they're going to ask the questions. And it's just a matter of time, right?